Now, France's second-largest bank has followed in the footsteps of its bigger rival. Profit and bonuses both fell last quarter at Societe Generale. The chief executive, Frederic Oudea, insists things are looking up, though, this quarter.
The beginning of the year is better than expected, thanks in particular to the decision of the central bank with the LTRO, the three-year facility. There is more comfort overall in the system. Countries have been able to issue at reasonable rates. My fear is that if something unexpected, in particular that Europe is not able to deal with a relatively small problem, at the end of the day, could change this positive evolution. That's my worry. Let's be prudent. Again, the environment can change. It was better after 6 weeks, but let's wait and see how it goes going forward.
And Oudea told us expect a very different SocGen in the future.
The world is changing fundamentally. We will not make the same business. The European economy will not be financed in the same way. With Basel III, which is going to be implemented in the next 2 years, there will be more financing coming from the markets. It might be something good or bad, but the reality is this one. We are going to move towards a more Anglo-Saxon model. We have the ambition to be one of the very few banks in Europe, in the Eurozone, able to provide that kind of services to our clients. So we reduce certain activities, but further develop others. And as I've said, the beginning of the year on the Eurobond market, for me, is the best example which show that we are able to achieve this ambition.
Societe Generale CEO Frederic Oudea there, and you can hear more from our interview with him later on in the programme.
As for the numbers, its net income declined to 100 million euros. Analysts expected more than 300 million, and unlike BNP Paribas, there'll be no dividend.
But SocGen has now written down its Greek sovereign debt by 75%. The company's shares are up an amazing 30% so far this year, having fallen 57% in 2011.
From quite a low base, though, it has to be said.